But our fellows, once we joined the euro, of course, had access to a huge pool of money internationally. And as I mentioned in that article, they were like children let loose in a sweet shop. They went in and gorged themselves, and then they got sick, and we all got sick with them.
So they had all this money available to them, which they then passed on. And because it was so plentiful, they didn't apply the usual banking criteria to assessing the borrower.
So it would seem. The money was available. There was no exchange risk associated with it. Interest rates in euros, of course, were always very low, much lower than we had been used to with Irish pounds. So suddenly this seemed to be a great bonanza. And I remember looking at, because I was flabbergasted at this idea that credit could grow by 20, 25, 30% a year, while nominal GNP grew at 6, 8, 10% a year. It just didn't make any sense. And
you point out that even, and you have run the National Treasury Management Agency very successfully and very cautiously. You didn't get stung in the way others did. But when you were looking for people to buy, some of the banks to buy some of your bonds, they were found wanting. They had other things to do, other fish to fry.
Yeah, well, that's very true. We had a system of primary dealers just to buy Irish government bonds. And when we had an auction, they took up the bonds for us, and then they sold them on to their clients. But neither of the two main Irish banks facilitated us in this. One of them was a primary dealer, and then in the middle of an auction, much to my annoyance, they actually pulled out on us. And we were left high and dry. I complained bitterly about it, but I got absolutely nowhere. So it wasn't as though they were supporting the state. They were not.
They were supporting themselves.
Supporting themselves. They were much more lucrative areas of activity than to be bothered with the likes of us.
Now, this business of liquidity, and it subsequently became solvency, whether or not those banks were actually broke, but not having the cash they needed to do their business. You say that as long ago as 2007, that was apparent.
Well, what happened in 2007, I remember it very clearly because I was on holidays. In fact, I was on the beach when I got a phone call on my mobile phone. And the complaint was, I always kept a huge amount of cash because I saw countries get into trouble in South America in the 70s and 80s, etc. And it wasn't that they were in a huge mess, but they just ran out of cash, didn't have enough liquidity available to them. So I always held on to a huge amount of liquidity. We'd have 5 or 10 billion any one day, and we used to place that in maybe 100 banks around the world.
And you get an overnight margin.
You get an overnight rate on them, yeah. Now, my colleagues began to get jumpy about what was happening in the markets. This was, by the way, going back to August 2007. And they began to put money instead with the central bank. Because, of course, you get a slightly lower rate of interest with the central bank, but you were sure that your money was safe. So we began to do that. And the phone call I got was, what are you up to? You're going to squeeze liquidity in the market. And my attitude was, well, I'm going to look after the patch that I'm responsible for. If we put money in the central bank can recycle it back out to the banking system if that's what they want. And they know an awful lot more about the banks than we down in the NTMA knew. So I said, well, let the fellows who are responsible, there's 1,000 of them down Dame Street, so let them go and sort it.
So you put the money with the central bank, and the banks then started squealing. They couldn't get the money. So the central bank must have known what they were up to.
Oh, I'd say they did know what they were up to. I mean, this didn't just hit us today or yesterday. This is going on now for over 3 years. And we've had plenty of time to sort out our problems in the last 3 years.
Now, the big question as to why the depositors were protected, that was fair enough, because a run of the banks and ordinary people's savings going out the window, that was something that had to be avoided. But the bondholders, you say, that decision to defend the bondholders, to protect them, is inexplicable because bondholders are paid more than you and me who put our money in the bank for the risk they are taking.
That's right, and that has always been the case. I mean, if you buy bonds at 100 and the interest rate is 5%, now if interest rates suddenly go up to 8 or 10%, well, your bonds are going to fall to 50, 60, 70 or whatever. And if you want to sell them, that's what you're going to get for them. So once you buy a bond, you take a risk. Now, in addition, if you buy government bonds, my attitude always was there can be no default on government bonds, never, under any circumstances.
But if you buy Allied Irish Banks bonds or Anglo bonds...
Yeah, or bonds issued by a multinational or a big corporation or whatever, you do take a risk. You take a risk that interest rates will change, and you take a risk that you won't, or you may not get all your money back.
So do you have any understanding as to why the bondholders were protected that night?
I haven't. I wasn't there, and people say, well, why didn't I do something about it? I was actually in the States at the time, and I woke up to hear this great news, such as it was.
And did you spot straight away that they had done something incredibly stupid?
No, I wouldn't put it as strong as that. I suppose I was bemused at what they had done. Now, I could see what would have happened. The gun was put to their head probably late one night. Now, why it got that far, I don't know. I suspect a lot of the people who were there that night were not experts in financial affairs.
So they were gobbled up by the bankers?
I suspect, as I say, I don't know, but I suspect there could have been an element of that, yeah.
You see, we protected the bondholders, but we know from the AGMs and the EGMs of the banks that many ordinary people were burned. They were shareholders. Yes, they weren't big corporations or even large pension funds. Often they were people who got a bit of a lump sum and were advised, put your money in Anglo-Irish banks or put your money in Bank of Ireland or even in Anglo shares because banks were safe. Yeah. Those people got utterly burned. And the risky guys, the bondholders, they didn't get burnt at all.
No, it was quite extraordinary. I mean, the people have, decent people and pension funds and everything else, they've lost an absolute fortune because they thought they were buying top-class investments and buying shares in the banks. You couldn't get anything more secure. So they had a nice dividend every year, not a huge dividend, a nice dividend, a bit of capital growth, but at least their capital was secure. Suddenly they found themselves wiped out. And generally at an age when they were not in a position to rebuild any kind of pool of wealth. And I think it's awful.
Again, there must have been a lack of understanding in Merrion Street about what was going on, or maybe I don't know. I mean, it is still, the governor, the current governor of the central bank said, well, they had to do what they did because they could have destabilised the whole banking system. That's a call, though, isn't it?
Well, what has happened since is that has the banking system not been destabilised? And by the way, to a large extent by officialdom, because this endless call for haircuts, the endless abuse of the banks has done nothing but destabilise them.
Okay, this brings me to NAMA.
Yeah.
And what you said, that basically NAMA has a mandate to do what it likes, more or less. Mm-hmm. It can decide what something is worth, and therefore, because it decides what something is worth, that's what it's worth.
Yes, and I mean, there is no absolute value for any piece of property. And at this stage, of course, there's effectively no market in property. So not much is being sold. So whose guess is it? I mean, they've claimed these are prices going back to, I think it's November 2009. I mean, who can say what stuff was worth in 2009? But there's all this business about applying haircuts so that the exchequer won't be ripped off, the taxpayer will be protected and all this. But the point of the thing is that the Minister of Finance said that at the end of the day, if NAMA loses money, there'll be a levy on the banks. So I don't figure out quite what all this thing about protecting the taxpayer is.
Do you think NAMA is being too draconian?
Oh, absolutely, yeah. I think it's extraordinary.
Do you think NAMA, as I seem to infer from your article, NAMA is part of the reason that the banks are in flithers?
Oh, I think it is, because they've imposed huge haircuts on the banks in respect of its the assets that they have. Apparently the banks are not allowed challenge the valuations that NAMA put on these assets until the whole transfer is completed. God alone knows when that happens. But at that stage it's too late. The patient could well be dead. But and also, even at the Public Accounts Committee, I mean, these allegations that were made down at that Public Accounts Committee meeting, that there were almost fraudsters and liars in the banks, I thought that was absolutely outrageous. Talk about trying to destabilise or damage an already sick patient.
So you're saying, I mean, I was one of the ones saying if they told lies, if they were trying to put their hand in my pocket and steal cash out of my pocket by putting values on loans that did not justify it, that was fraud and they should be interviewed by the Gardaí. But you're saying, no, they were coming down saying, no, this is the value that we believe this particular loan has, and you guys are telling us it's 40% less.
Let me declare an interest, first of all. I am a public interest director on the board of AIB. Now, I've no particular axe to grind. I was arm-twisted to go on that board, and I did so. But based on the information I was told, I don't think those haircuts were justified. Now, you can justify anything at the end of the day, but what exactly are they trying to do? If you look at any business, and you look at it on a break-up basis, it's not worth very much. If you break up RTE at this moment, what are the assets? Not huge. You wouldn't get very much for them. But on an ongoing basis, they're worth an absolute fortune.
Yeah.
And the same.
It's like saying that when the share price is down internationally on all the stock markets, that if all the people in the company had to retire at that moment, that your pension fund would not pay them.
It wouldn't pay them. No, it's bust.
But in fact, your pensioners don't all retire at the same time, and the stock market will change.
Will change, and NAMA is going on the basis that everything suddenly stops, but that's not life. If we applied that rule to all our activities, sure, we'd all be bust. Everything would be bust. Nothing would happen.
Has NAMA been tried anywhere else? That kind of model?
I don't think so. There have been small bad banks set up elsewhere. There's been nothing on the scale of this thing.
So is NAMA, in your view, another disastrous decision, or is it the way in which NAMA is being run that is disastrous?
Well, I was sceptical about NAMA from day one. Now, I did say I supported the concept. I did when I was up before the Public Accounts Committee about 18 months ago. I expressed misgivings about the whole concept, which didn't go down very well. I don't think it was the way to go, particularly with the way it has been implemented. There are ways of doing business and there are ways of not doing business. If you had a businessman running NAMA, it might have been a different kettle of fish.
Yeah, and then we saw the way Bernard McNamara ended up going wallop through NAMA. We see Paddy McKillen fighting all the way to the Supreme Court to try and keep. Does that tell you that NAMA's kind of...
Well, I understood Bernard McNamara had a very good building business. Whatever about his development business, where he may have got into trouble, I understood they had a good building business. I gather there are a whole load of projects kind of on the way, half finished. Many
of them being paid for by the state.
Probably, yes, yeah. And many other contracts on its way to him. But, suddenly the whole thing is killed. And where do we go from here?
Is there anything we can do to reform NAMA, or is the horse bolted?
Well, I don't think this administration are going to reform anything, because they've tied their coat to this thing now. And it may be that a different administration would do something about changing it. But
in the meantime, they've decimated the balance sheets of the banks. They've lowered property values to maybe artificially low levels now. Who knows? Because nothing's selling. Nothing is selling.
And what's happening now, of course, as prices fall, people get into more and more negative equity. People get extremely upset. And psychologically, they're stuck with a debt around their necks for the rest of their lives.
Michael Summers, thank you very much for joining us on the programme this morning.